Friends, gather round because we're diving into the wild world of cryptocurrency. Senator Cynthia Lummis, a woman who probably owns more cowboy hats than you own pairs of socks, has a bold plan. She wants the United States to create a strategic reserve of Bitcoin. Yes, Bitcoin, that volatile, decentralized currency your tech-savvy nephew loves. Lummis believes embracing Bitcoin could be America's ticket to financial dominance. Her plan aims to accumulate 1 million Bitcoin within 5 years. She argues a Bitcoin reserve could help reduce the national debt. Enter Michael Saylor, CEO of MicroStrategy and a vocal Bitcoin advocate. You might be surprised to learn that the US government already owns a sizable chunk of Bitcoin. This Bitcoin stash comes from asset seizures. The government has confiscated millions of dollars worth of Bitcoin from criminals. Currently, the government holds roughly 210,000 Bitcoin. Lummis's proposal calls for transferring this Bitcoin to a strategic reserve managed by the US Treasury. Think of it like Fort Knox, but with lines of code. This initial stash is just the beginning. Lummis's plan aims to accumulate 1 million Bitcoin over the next 5 years. Thanks for watching. If you're interested in how you can use your cryptocurrency for everyday transactions, check out my dedicated video on RedotPay. RedotPay is a versatile crypto payment platform that lets you spend your digital assets just like fiat currency, with a single transaction limit of up to $100,000 USD. Learn more about how to get started with RedotPay's virtual and physical cards, their compatibility with Apple Pay and Google Pay, and the robust security measures they have in place. Click the link in the description to watch now. Okay, so the US government wants to buy a boatload of Bitcoin, but how exactly do they plan on doing that? Well, it's not like they can just stroll down to their local Bitcoin ATM and start swiping Uncle Sam's credit card. The details of the acquisition strategy are still being worked out, but it's likely to involve a combination of methods. One option is to purchase Bitcoin directly on the open market through regulated exchanges. Another possibility is to acquire Bitcoin through over-the-counter OTC desks, which specialize in facilitating large transactions between institutional investors. These OTC desks can provide greater privacy and price stability compared to public exchanges, making them a more attractive option for governments and large institutions. Of course, acquiring 1 million Bitcoin won't be cheap. Lummis insists that her plan won't require raising taxes or adding to the already gargantuan national debt. Section 4. Bitcoin to the rescue, tackling the national debt. The US national debt is a colossal issue, and it's only getting bigger by the day. Lummis believes that her Bitcoin plan could be a key part of tackling this behemoth. The idea is that by investing in Bitcoin, the government can potentially generate significant returns that can then be used to pay down the debt. Bitcoin is notoriously volatile, with prices swinging wildly up and down. But Lummis and her supporters argue that Bitcoin's long-term growth potential outweighs the risks. They point to its limited supply, its growing adoption by institutions, and its potential as a hedge against inflation as reasons to be bullish on its future prospects. If Bitcoin were to continue its upward trajectory, even at a more moderate pace, the returns could be substantial. These returns could then be used to chip away at the national debt, potentially even putting the US on a path towards solvency. Section 5. Saylor's Projections. A Bitcoin-powered debt-free future. Remember Michael Saylor, the Bitcoin-loving CEO we mentioned earlier? He's been crunching the numbers and believes that a strategic Bitcoin reserve could be a game-changer for the US economy. Saylor has presented projections suggesting that if the US government were to invest in Bitcoin and the cryptocurrency were to continue appreciating at a certain rate, the country could potentially eliminate its national debt entirely by 2045. Now, before you start planning your debt-free retirement party, it's important to note that these projections are based on a lot of assumptions. They assume continued adoption of Bitcoin, favorable regulation, and most importantly, a sustained increase in its price. Despite the uncertainties, Saylor's projections have certainly caught the attention of policymakers and investors alike. They've sparked a debate about the role of Bitcoin in the global financial system and its potential impact on national economies. Section 6. Fiscal responsibility, no taxpayer money needed. One of the most appealing aspects of Lummis's proposal is that it claims to be fiscally responsible. Unlike many government initiatives that require raising taxes or increasing the deficit, This plan aims to utilize existing resources. Lummis proposes funding the Bitcoin purchases using excess reserves held by Federal Reserve banks. These excess reserves are essentially surplus funds that banks are required to hold above and beyond their lending requirements. By using these existing reserves, Lummis argues that her plan wouldn't burden taxpayers or further inflate the national debt. Critics argue that even using excess reserves still represents an opportunity cost. Ultimately, the decision of whether or not to establish a Bitcoin strategic reserve is a political one.